Hello there, welcome back to EMS Grade 9. This person is not the book, but the person paper. Question, person 3, person question is analyze the following transactions, show the effect that each one has on multiplication. So, given an example in terms of paid 1,000 rands for wages, but remember what you have to do is to first try to bring down the double entry that is involved in that transaction, and then you see where it's affecting in terms of the account equation. So whenever we pay 1,000 rands for wages, remember the double entry is that wages account is expense, so obviously we are going to debit it. We are going to debit our wages account, obviously. And now we are paying using cash. Obviously, we are going to credit our cash on bank. So this is what we are. So you'd see that you now analyze according to our wages. What is it affecting on the account equation? Remember, the account equation is say assets is equals to bonus equity plus liabilities. So you'd see that wages is an expense. So we adjust it in the income statement whereby it's going to reduce the figure for profit that we have. So net profit, we know that it's used to calculate also owner's equity. So you'd see that whenever net profit is being reduced, owner's equity also is going to be reduced. So wages is it reduced, net profit is going to reduce also our owner's equity. So you see that we're going to have a negative on our owner's equity, and also on the asset part of bank, we are crediting, and we know that whenever we credit our asset account, whenever we credit it, it's a negative, but when we debit it, it's a positive, which is different from now the liability account, whereby we're saying a liability, we, whenever we credit the liability account, it's a plus. Whenever we debit the liability account, it's a minus. So in this case, we are crediting bank, so it's a minus, so it means is an asset we are going to also subtract. So this is what we have. So this is exactly what we have in the answer section, whereby the example has been demonstrated there. So let's try to see what is the example saying. We are saying we are debiting our wages, and then we credit our bank, and then the amount is 1,000, and then you see that all our assets we put a negative, but that's equity is put a negative. So this is the same that we're just going to employ them. So if we come here, see that what we have to take note also is that we are having our accounting equation whereby we are saying our assets is equals to our owner's equity, and then we are saying plus our liabilities. So what we have is that we have got a demarcation that we have there whereby we put two sides, this side of the equal side, which is the left-hand side, and then we also have the right-hand side. So you see that in terms of the signs, a plus or minus, whenever we indicate a plus on the other side of the, if a transaction is affecting this side and this side, let's say we are debiting assets and then we are crediting liabilities, or we are entering in the assets, or we are entering in the bonus equity. So what happens is when one of the accounts is uh, on different sides, when we're having a plus this side, if the other account is the other side, it means automatically it's going to be a plus also, so that the totals of this side and this side becomes the same. So when you enter it as a negative this side, as a negative that side, it means also here it's going to appear as a negative. So this is what we have. So in other words, we are saying this should correspond uh, when let's say we are also it's affecting assets and liabilities, the same thing is going to happen. We are saying if it's a plus for liability section, it's also going to be a plus. When it's a negative, it's also going to be a negative, so that the two becomes the same. So what happens also is that if it's affecting one side, let's say it's affecting assets, double entries on assets only, it means that if it's a plus, the corresponding entry in the asset account also should be a negative, so that when we add subtract it comes back to the original figure. And total of the side would have been affected to means the same as the total of the other side. And the same applies to the other side. If the transaction is affecting owner's equity and liabilities, In other words, we are saying if you maybe debit owner's equity, and we are supposed to credit liability. So what it means, if it's a minus for owner's equity, it's going to be a plus there. And if it's a minus this side, it's going to be a plus there. So that the total of this right hand side remains the same total value of the left hand side. So this is what we have in terms of this account equation. So let's try to see in terms of the transactions that we are given. So you would see that when if you come here, our first transaction is 3.1, and we try to see how it is affecting the double entry, and then you see how it's affecting the components of the account equation. It means our goods costing 3,000 rand was sold with credit to Cinderella. A markup of 25% was maintained. So we have got goods being sold with a cost price of 3,000. So what does it mean? It means we are going to have a process of double entry that we are going to have there. Remember, when we sell goods, these goods will be in our stock, so we have to remove them in the stock. That is the first set of double entry. The second set of double entry is that we are going to make the double entry also for the sales. We are using the same price. So we are going to use double entry at cost price and then double entry at same price. So this is what we. So on the first set, we are saying goods costing 3,000 was sold. So it means we are going to remove these goods from our books at cost price. So the double entry that we are going to have there, let's try to check there. What are we supposed to do? So remember, when we initially bought these goods, we debited our trading stock account. So what it means is these goods in the trading stock account is on the debit side is 3,000. So as we are selling them, we're supposed to remove them from the debit side of the trading stock account since they are now moving out of our business. So it means this 3,000 we are supposed to credit it. So basically what we are saying the double entry now is we are crediting to remove them in the books, and then we are supposed to debit them in the cost of sales account, and we debit them as 3,000. So basically, this is the double entry that we have, whereby we are saying debit cost of sales, and then we credit our trading stock account. So having identified the two accounts that are being affected, you also have to I try to classify these two accounts that we have in terms of our accounting equation, which says our assets is equals to owner's equity plus our liability. So we start with our cost of sales. We see that cost of sales is adjusted in the income statement. So income statement, that's where we calculate our net profit. So it's going to affect our owner's equity. So remember, the formula that we use on the calculation of owner's equity is you say your opening owner's equity, and then you get your net profit, and then you subtract your trades, and then you get your owner's equity. Owner's equity, which is the closing balance. So basically, the closing balance is the one that we have here. So what we are saying is when we are charging cost of sales, they don't reduce the figure for net profit. So this figure is going to go down. So if this figure goes down, it means also owner's equity is going to go down. So this is what we have. So obviously, on owner's equity, we are going to have a minus, and then we go to our trading stock account. We are crediting. Trading stock account is an asset account. And remember, all assets, when we credit them, we are subtracting. So it means on assets again, we are having a minus. So that same element that we explained earlier, that when we are adjusting, when we subtract that on this side, it means the other side of the equation, we are also supposed to subtract. So see that this is coming out. So if you go there, we're going to put this first set of double entry whereby we're saying we are going to debit our cost of sales and then credit trading stock. So let's try to see what to the person. So what we are saying we are debiting cost of sales, so we can just indicate it here by saying our debit cost of sales, and then let's try to see. I think we see the wrong in the wrong column, so we just put it here. We're saying debit this side, we are debiting cost of sales, and then we are crediting trading stock. So in terms of amounts, let's try to refer back and see what amount we have for the person. So if you come here, you see that the amount that we are giving there is 3,000. So we are just going to indicate it as our 3,000. So we are saying amount here 3,000. If we said we are going to notice a subtraction on assets as we are creating credit stock for the subtraction here. Then our owner's equity, we are also going to have a subtraction. So this is what we have. Then on the second set, we are now reporting it at selling price. So on our second set of double end, we are now recording at selling price, whereby we are recording the sales now. As we are saying, these goods were sold. So this becomes the second set of double end that we're going to make. So remember, we have a sales account, obviously, because we are selling. And then we are selling on credit. So it means the other entry is going to be a debtors control. So you've got sales and debtors control. So what we are supposed to now to indicate is that which one we are debiting, which one are we crediting. So you see that we are debiting our, since we are selling, we are on credit, we are debiting our debtors control, and then our sales account we are crediting. And remember, sales account is always crediting. So we have to take note that sales account is always credited. And let's take note of that. So the amount that we have now is 3,000, but 3,000 is given at cost price. The figure that we want to enter here is our amount is going to be its selling price, of which now remember when we say our cost price plus our backup gives us our selling price. So what it means here is that we are giving our cost price is 3,000. And then the figure that we want is the selling price. So selling price, we don't have the figure, so we can just make a simple proportion by saying, remember, when we present it in the proportion of percentages, we are going to say our cost price is always 100%. Then we add our markup, which is depends with the question. In this question, we give it just 0.5%. And then our selling price is the figure that we want. So which is our 100 plus 25%, it becomes your 125%. So what does it mean? It means we can just use simple proportion there by saying we can use simple proportion there by saying our 100% is equal to 3,000. So the figure that we want is 125%. So we can just make a simple proportion by saying what we don't have is a numerator. What we have is a denominator, it is 100. The numerator with given figure, which is 3,000 over 1. Then we try to calculate it as such to see that the figure that we are going to get is 3,750. So this is our selling price. So this is indicating our selling price. So this is the figure that we are going to debit and credit there is 3,750. So we can just go there and summarize and then try to see on the account equation, how is it affecting the account equation. So remember, we have our sales, we just it in income statement and it increases the figure for net profit. And you said anything that increases net profit will also increase bonus equity. So we're going to have a plus on bonus equity. And then we have on debtors control, we are debiting, this is an asset. So we are also going to have a plus on assets. Because remember, we debit more assets, it's supposed to show it as a positive. So we come here, just indicate it as such. Come on the other section. We are saying we are debiting our debtors control. So remember, sales is already pre-entered there. So we're just going to go to the debt side and say debtors control. Debtors control. Then the amount is 3,750. 3,750. The effect on the account equation is already entered, which is a plus on assets and the plus on other security. So this is what we have. And then we go to the last part, which is 3.2. So 3.2 reads EFT 40 was processed as a payment of 4,700 rands to Captain Hook in settlement of account. So this is what we have about this transaction. So remember, this was a payment. So obviously, we are going to credit our bank. We have got our bank account, and the transaction release was processed as a payment to Captain Hook in settlement of account. So remember, whenever we have got a term account, it means that this person was a creditor to us. So obviously, the other account that is going to be affected is creditors and control. So it means we are paying our supplier or our creditor. So initially, when we bought from the creditor, the creditor's control, we credited it with 4,700. Now we are paying the creditor. It means we go to the opposite side. We are debiting creditor's control, 4,700. So basically, this is what we are going to do. We're going to debit our creditor's control. And then obviously on our bank, we are paying money is going out of the business, so we credit at the bank account. Remember, concept that says we debit and the receiver and credit the giver. So bank account is the giver in this case, money is going out, so we are going to credit. Then we identify in terms of the account equation which one is being affected. We see that creditors control is a liability. So obviously on our account equation which says assets, is supposed to bonus equity plus liabilities. We've got our liabilities being affected here by crediting. We are debiting our liability. So when we are debiting, it's a minus. Remember, we credit a liability account, when we have our liability account, when we credit, it's a positive, when we debit, it's a negative. So here we are debiting, so it's a negative. So basically, we are saying our liability, we are going to show it as a negative. And the other account that is being affected is bank, and bank is being credited, and we know that bank is an asset account, and all assets accounts when they are credited, it's a negative again, but when we are debiting, it's a positive. So in this case, we are crediting, so it's supposed to get it as a negative. So this is what we have. So this account that this transaction is affecting our liabilities and our assets. So we are just going to get a search on our answer section. So come here. You see that in terms of our debiting, remember we are saying we are debiting creditors control. Just control. And then effect on the accounting equation, we are saying we are going to notice a minus on assets and then minus on liabilities. So it means here we don't have anything. The transaction is affecting our assets and our liabilities. And the same concept is applying there, whereby saying at this side, if it's a negative, the other side of the equation should also show a negative. So this is what we have according to this video. Those who have been subscribed, please subscribe and share. And still come with more videos as well this video website.